if you look back and you're teaching a history class, what would you blame the increase in prices on back at that time period?
So I'll start with the fact that it was extremely global. So we saw there literally was a point at which not a single country in the world had inflation 2% or below. So it was everywhere. So you have to look to common factors. And I would say that the pandemic and the closing of the global economy and then the reopening of it, in all cases with some support, that's a big part of the story. Clearly, though, there's a role in that for fiscal policy. There's a role in that for monetary policy. And I like to think all of those factors were involved. And but when it happens everywhere in the world, you can't look to one thing. You got to look to something, a common factor. And I think that common factor is what happened around the pandemic.
Sure, good. And build on that idea. I hate it Monday morning quarterback, but if you had to do it over again, you had this opportunity. As you know, the rates stayed pretty flat in 2021 as inflation creeped up. What would you do differently today if you had the opportunity to look back and make some changes?
I have perfect hindsight in this.
Yes, sir, if you had it, yeah.
Sure. So clearly I would have raised rates a little earlier. I honestly don't believe it would have made much difference to the outcomes, but we would have looked a lot smarter. But that's something I would have done. The other thing is, ultimately, we did get all the way back to 2% inflation just about without having a big increase in employment. So that was not at all expected. So I don't know how that would have affected my behavior, but somehow things really came out much better than everyone had anticipated. Was that it would take high unemployment to restore inflation, but it didn't.
And the other pressure point that I hear a lot of people talking about is this idea of the tariff issue. I've heard for months now that the sky is falling, but it seems at this point at least that the inflation rate is pretty steady. And how many months of steadiness do you need before you might look at an even larger rate cut from the 4.33 I think we have today?
Yeah, so you're right. Inflation, the non-tariff parts of inflation that we've been working on for 3-4 years are behaving really well. And that was our forecast, but it's good to see it coming true. I would say we expected that tariffs take a while to work their way through the distribution chain, several months. And I would say we would expect to see meaningful effects, kind of June, July, August. And if we don't, we'll be learning something. We have a highly adaptive, flexible economy, and it's certainly a possibility that the tariffs that we expect will come through in a much smaller level. We can't know that until we actually see it, but I think we'll be learning as we go, and if we see that, then that would lead us to want to cut earlier. The other thing that would lead us to want to cut earlier is if we actually did see some weakness in the labor market of a troubling nature, and we don't see that. Those are the two things we'll be looking for.